Greetings and welcome, everybody. I am here today again with Josh Rhodes. Josh, great to see you.
Richard, happy Friday. Yeah, thanks for having me.
Continues to be interesting times we're living in, huh?
Yeah, you're not lying. I watched your video with Justin from last week, and I felt like I was missing out. Every 7 days, there's enough content there that we could fill an hour. So yeah, there's too much going on.
Absolutely. So tell me, what's on your mind this week?
Yeah, well, first, it was cool to see you navigate the app last week. I mean, as you know, I play with it myself, but it's powerful. You put it in the hands of a wizard and things get crazy, man. So that was cool to see. Speaking of crazy, actually, let me share my screen. I've got some cool stories, some topics I wanted to go through. To be honest, it's crypto crazy this week. Can you see my screen?
I got it. Yep.
Yeah.
S&P 500 rallies 2.5%.
Yeah, exactly. Because I'm crypto crazy this week, I thought maybe we could start in an interesting spot. This is from Tuesday, where US markets saw their biggest jump since June of 2020. And people can do their own research. There are hundreds of articles that have similar taglines. And what I wanted to bring up is you see a headline like this and it gets folks excited. It feels like we're changing direction, and you consuming data and looking at trends. And I'm curious, is this just smoke or are we changing directions here? I haven't asked this in a couple of weeks, so maybe this is just a temperature check on the market.
Look, we are at a significant potential bottom, I should say. There's a lot of indications that this could be a significant bottom, but I'm not convinced. And, these kinds of snapback rallies, short squeeze rallies, where you get the best day since June 2020 are nothing to get excited about. In fact, one of the things I've been talking about this past week is this work of Harry Markowitz from 70 years ago. Okay, he wrote his 1952 paper called Portfolio Construction, published it in the Journal of Finance 70 years ago, and it was the beginning of modern portfolio theory. Okay, and what he showed is that as kind of uncertainty expands, and in the markets, uncertainty is expressed as volatility, right? That there's a cost to that, right? And Josh, I don't know if you saw it, but I showed a picture of kind of the spaghetti plots of like hurricanes, And so what we're seeing here is we're seeing volatility expand, right? So the S&P 500 being up 2.5%, its best day since June 2020, isn't really a great thing, because it means that volatility is expanding. It means that, prices are, it's harder to bet on any one price outcome. So every single price outcome is discounted. Okay. So this isn't anything to get excited about. I think we'd have to see the market get up above 4,300 and stay there, probably 4,400 and stay there. Right now, it's falling again today. Not sure when this is going to get published, but so no, this is not something to go all in on, because the Dow was up 2.5% in a day.
I figured we were going to body this a little bit. And so right behind this question, I wanted to maybe put a comical topic. And a couple of weeks ago, we talked about this Sotheby's NFT auction where they were going to sell through something like 104 punks or something like that in one swing of the bat. I promised the team here that I was going to do an update afterwards. I asked you if you were going to keep your eye on it, and you said absolutely not. I said, I've got you. I will. Folks listening are probably wondering, like, I didn't hear anything about it. I thought I was supposed to get, 30, 40 million bucks or whatever it was. Here is why you haven't heard anything about it. Folks dialed in, logged in. There's a live stream available where you could actually watch this happen. So they dial in, they sit on this screen and waited past the 5-minute break. And it was another like 35, 40, 45 minutes before Sotheby's finally said, hey guys, this is actually not going to happen. The seller of the NFTs, I pulled his Twitter here. this is the day he announced it. This is on the February 8th. But if you look at the day that they were supposed to do their auction, excuse my clicks here, he decided to update it. February 23rd, he just retweeted and said, never mind, decided to hold, and just canceled the auction from Sotheby's. And so as you can imagine, the Twitter world, especially the crypto world, just went bonkers. And this guy claims, here we go, he claims that he sort of rugged Sotheby's, and crypto world's pissed. You made us look silly. This is not a joke. We're trying to build something here. You're making us a meme, that type of stuff. I'm happy to get your feedback here, but this was more me kind of closing the loop here on what's kind of turning into a comedy skit.
Yeah, I mean, this is why I don't watch it, Josh. There's nothing here. It's like the whole Super Bowl commercial thing. I mean, this stuff is a joke. This stuff is not worth paying attention to. The crypto community's got to make meaningful stuff happen. They got to show real change. Whether Sotheby's holds an auction or not, I don't care. This is a distraction from what the crypto community needs to be doing to demonstrate viability. And, if it's just another marketing technology, just another auction market, then I don't think we need it. Yeah. So to me, look, it's probably a good thing that this kind of sale didn't happen in the midst of a serious global crisis like war in Ukraine. Because this is a joke. Yeah. And, I think they all got what they deserved.
We talked about in our last meeting how there is a lot of noise and distraction, and I think maybe even the prior meeting you said something like, where's the beef in all this? Like,
where's the beef?
Give us something here. Where do you go to get your crypto noise, or to get your crypto information to avoid the noise is my question, because there seems to be we've talked about how these massive companies are doing commercials, and they're investing in stadiums, and they're buying teams, and they're putting their names on jerseys, and things like this are happening, and there's rug pulls. Do you have any information sources you tap into to, get the right information, or to start to lean in the right direction? You have any guidance for me here?
At this point, my insights come from my personal network of, friends, engineers, people working in the space, people running businesses, people that have been writing about it for a long time. One of my friends, Paul Rosenberg, has a newsletter that he publishes. It's not specifically on crypto, but it's called Parallel Societies. I really like his work, and he's been a long time grassroots crypto guy, but the themes that he's talking about in Parallel Societies are the themes that really gave rise to the crypto community in the first place. And I'll tell you, they're not themes about Sotheby's auctions and, Tom Brady and Matt Damon and a Super Bowl commercial. This is not what crypto is about, and I think these people who are trying to put crypto in the mainstream are making a huge mistake. I think they are undermining their credibility ultimately with the true believers in the crypto world. And I think that they're just using the old playbook to try to make a buck while, crypto's in the news. And that's not going to really be a revolution. So
that question or topic of where's the beef, I've thought about that many times since you've said it to me, and try to apply that as different noisy topics pop up of this type of NFT or this utility, or, this company just raised funding, and I'm trying to figure out, is this just noise, or are they just rebranding old tactics and old habits? One of the cooler things that I've seen in the crypto community, and I wanted to get your take on this because this feels like beef. Let me show this to you. Here over the last few weeks, the Ukraine has opened up and sort of started to crowdsource from anyone that felt moved by what's going on. And as of Wednesday, this is last Wednesday, so March 2nd, The United Nations had donated $20 million to the Ukraine. Cryptocurrency wise, you see where they're at now, $40.5 million. Even on March 2nd, they're at 36. So
wow.
The crypto community and donations are outpacing what the UN has provided as far as war contribution.
This is some beef.
Yeah.
Right. This is some beef. And, imagine if the hundreds of millions that these companies spent on Super Bowl ads had gone into something like this, right? Like that would be a signal to the world that these companies are, really operating on a different set of values than what's gotten us into this mess that we're in right now already. So this is exciting. This is authentic, and kudos to the people who do this, who did it, and kudos to the technology that makes it possible. I think it's awesome.
Yeah, this is super cool. Behind this, and we have to bring up this topic. I have to bring up this topic, just given the platform. I think it. In fact, I may even have a graphic here behind it that I wanted to pull. This is, again, from March 3rd, so this last Wednesday-ish, but as you know, and many folks know, I mean, hundreds of thousands, over 1 million Ukrainians have now fled Ukraine, over 1.2 since Russia invasion began. I'm happy to, I'd love to get your thoughts on just this in general, but this being a financial platform, I wanted to maybe, if we're comfortable with it, get your take on what impact this has on us. Like I've seen that the impact in gas prices, or it feels like gas, oil seems to be skyrocketing. Is there anything else that US as an investor or just looking at the markets that we could or should expect from this type of chaos outside of the US?
Well, I'm also involved in work with cycles, the Foundation for the Study of Cycles. And the foundation has been forecasting big cycle changes. And I think that this is just another indication that we are in the midst of big cycle changes in our world. I think inflation, rising rates, war, these are all signs that things are not going to look the same tomorrow as they did yesterday. Okay, in general, there are big changes, big systemic, cyclical changes taking place in society, in economies, and in the world. And so I don't think this war in Ukraine is going to be resolved quickly. I think it's going to continue to get more complex. I think there's going to be mistakes made that hopefully don't turn into even bigger escalations. But I think this is with us to stay for a while. And I think that what it really is telling us more than anything is that we need to be rethinking a lot of our assumptions about how the world works and where things are going and what's important and what's not important. And, I'm sorry to say that I, have predicted more crises and, less exuberance over the past couple of years, and really, especially from the second half of 2021, talking about, hey guys, this is getting crazy. Robinhood is not a company that should be worth $90 a share. And today it's worth 11. So, and don't anchor on prices from the past. Just because something was $90 and now it's 11 doesn't mean it's a bargain. It can easily fall, to 5. So, the big takeaway is that you have to really start looking at your assumptions about how the world works and, thinking about a new world. And so I think that's the biggest takeaway for us here in the US. It hits a lot closer to home, obviously, for people in Eastern Europe and even in Europe itself, right? I was talking to a friend in Germany, refugees pouring in there from Ukraine, and they're feeling it a lot more viscerally than we are.
Embrace for or prepare for change. I mean, difficult time. And I've in our Discord, I've continued to sort of be involved in the chat. And I find it's one of the more involved questions or questions people probe with is your work on cycles. So I think moving forward, we'll start to play with that a little bit and see what we can pluck from there. I'm looking at my time. There's a dense topic that may take us a couple of episodes to unpack. I don't know if you've seen this, the executive order. This is around, they call it digital assets, AKA cryptocurrency. But this thing is dense. Definitely the most official document I've pulled up on my computer, and I'll clear my cookies afterwards because I don't know what's attached to this. But this came right from the White House. And I saw leaks earlier this week and even late last week about what this could entail, the short of this. And I actually pulled up a thread here from Jeremy, who is the CEO of Circle. And he calls this a watershed moment akin to 1997 when the government woke up to commercial internet. This executive order, it calls for all of the top sort of the relevant federal agencies to understand and start to develop policies to understand and address the risks associated or involved to cryptocurrency. It calls for these guys to actually support innovation in the space. If you go down to the very bottom of this thread here, his last tweet was something that caught my eye. He says, for those of us in crypto, see if I can find it for us. It may have even been a bit lower, but I wrote it down. For those of us in crypto, this should be viewed as the single biggest opportunity to engage with policymakers on issues that matter. Have you had the chance to see this executive order? Is this something I should punt to our next week? Or do you have any feedback on just what this looks like, what it can mean for digital asset owners?
I haven't read the whole thing. I've seen some of the highlights. It is a significant moment, even a watershed moment for the government to really acknowledge that this is something that they want to come up with a plan for. It's encouraging that it didn't include, regulation right out of the gate, and that they're really indicating an openness to dialogue and recognizing that this is a significant new technology, and at least giving lip service to innovation. So that's great, right? And we're seeing a lot of institutional acceptance of Bitcoin and of crypto. So that's all a good thing. Now, what scares me, is like, we're here from the government, we're here to help. We're from the government, we're here to help, right? And, as much as I appreciate the opposition to the Russian invasion of Ukraine, some of the tools that the governments are using, that the United States are using, weaponizing the financial system against the Russians, this is scary stuff. It's a level of centralized control and at this point, it's pointed at the bad guys, right? But this is a power that the government is exercising and that financial firms are increasingly exercising, right? To control who can participate in the economy, essentially, right? So that's a sobering reality. It's pretty antithetical to the ethos of the original crypto punks, not the ones at Sotheby's, but the original crypto punks. Very libertarian, very free speech, right? And so I don't know where this is all going to go, so on the one hand, it's encouraging. On the other hand, it's kind of terrifying. But look, we got to get in there. We got to participate. We got to try to influence it in a good direction. And we got to try to make sure that that the crypto world shows the beef, and not just the Super Bowl ads and the Sotheby's auctions.
Yeah, that's we've got to get in there. We've got to participate. It's more or less how I wanted to start to try to wrap us up. Given every couple of weeks when we have these conversations, we'll talk about this positive wave within the market, and then a just chaotic wave, and then cryptocurrency is the same. And it seems like volatility is the word that comes to mind, but there's just such extreme ups and downs and troughs and peaks, and given that level of volatility, as I was reading through, actually you may even be a friend of Chris's here. I think you guys are following each other, but I saw this on Twitter, and not your words, but I think the message, the quote here is something that's working with you as long as I have, I feel could have come from you. And so I wanted to maybe put this up, us read through it, talk about it, but this being in your wheelhouse, I'm kind of asking for advice in this volatile moment. He said, I noticed that lots of retail folks, investors, want to nail the bottom perfectly, whereas a pro will tell you that's hardly possible. Get the knees of the bears, the shoulders of the bulls, and you'll do great. Go for tops and bottoms perfectly, and you'll probably miss. That is such a good tweet. He claims to not be talking about cryptocurrency here, but more broader market. You have any thoughts, feedback? Could you maybe even elaborate on this a little bit?
I think one of the best ways to get over trying to nail the top and the bottom is to leg into your positions, right? Mm. So right now, things are a lot lower than they were, back in December. So you can buy things for less, right? Not a bad time to be buying if you have a horizon of at least a couple of years, right? So what I do at times like this, if I want to be long, then I am, putting in a quarter to a half of my position, and doing enough so that I will feel good if the market goes up, and I'll feel good if the market goes down, right? Because it's like, okay, I get to buy more at lower prices. And that's exactly what I was doing, Josh, back at the top of the market. I started saying, look, I'm selling, I'm lightening my load. I'm not getting out altogether, but I'm lightening my load because I think there's too much risk here of this being a top. And, I don't want to be caught, fully loaded at a top. Mm. So this world of retail finance is presented in such absolutes as all or nothing, and that's not the way it works. We can manage our risk. We can, change our position sizes. We can control for our volatility. And so in the end, you have to be participating in a level that you can still sleep at night. There's many ways to do that. And trying to nail tops and bottoms and be all in or all out is absurd, Yeah. So, but what it is it's really part of the media dopamine drip strategy to get us all, foaming at the mouth or, in a fetal position in our, on our floor. But that's not what you have to do. That's the media trying to get us to stick to our screens and be kind of disoriented so that we can be moved in whatever direction they want to move us. So look past it, ignore the media, manage your risk. And Josh, this is literally the 70th anniversary. The month of March is the 70th anniversary of Markowitz Publishing Portfolio Construction. This was a true financial technology revolution that 70 years later, the public is completely ignorant of.
Mm.
No institutional or professional investor would be without it. And the public needs to start to wise up and start to use this 70-year-old financial technology that's being used by professionals and is literally, I would say, the technology more than anything that is transferring wealth from the people who don't understand this technology to the people that do understand this technology. And this technology, this financial technology, actually, it underlies the very fabric of the internet today. So this is called risk management, risk design. Markowitz originally called it mean, like the middle, variance analysis, right? So you're talking about all these ups and downs and the craziness that's going on. What is it in a nutshell? It's more variance. It's more a variety, a wider spectrum of possible outcomes of where the future could go, right? And that variance has a cost, right? Return is good. If you can get a return, that's good. Variance of return is bad. Okay, that was the essence of his revolution. And I don't say variance of return is bad. I say different people can tolerate different levels of variance of return, right? But variance of return has a cost. It reduces the value of any one future path because now there's more of them to choose from, right?
Yep.
So this is something that retail needs to begin to understand. This is why we're building RiskSmith. This is why we're building this technology in this community to bring Markowitz to the masses. And I think it's something that we're starting to see get some traction, and that's really exciting.
Yeah. You've talked a little bit about if and when it makes sense having if you have this longer term horizon where we're at today, being able to get in and be involved and stay involved. It's one of the things that I've attached myself to you for. It's one of the strategies that you talk about that I attach to is, rather than listening to the noise and getting hit by one of these waves and allowing them to influence you and saying, I just heard about GameStop. Let's go buy some of that. I just heard about Doge. Let's go buy some of that. Let's go get an Ethereum. And instead, taking the weeks or month or whatever it does to go pick your 12, 15, 20 tickers, do your research, ensure that you're emotionally and mentally and your heart and that you believe in what you're investing in versus trying to stay, ahead of the game or in front of the markets or time the markets like we've talked about. I have, and I'll close on this, a super cool graphic. It's a really confusing one, but this is in the same thread here. At the very bottom of this, he says the most painful place is not being in the market when we're ripping the upside. And maybe it's Barry, one of these guys. Here we go. It's Barry. You got a friendship with, where he says there's a great study that shows the bulk of Bitcoin gains each year come from the top 10 trading days. Can you show us that, Tom? This graphic is so cool. It's a little confusing, but basically the light blue shows the top 10% or the top 10 days delta. And the blue shows if you remove those top 10 days, everything else. And basically he's saying if you remove the top 10 days from every year, Bitcoin would be down 44% annually between 2013 and 2019.
Wow.
Super, super interesting. And the point being is not that Bitcoin is bad or that it's a bad investment or anything like that, but that those that got in early and believed in the message and stuck with it stayed. Those that tried to time the markets and had the influences likely missed the bulk of these returns, these big jumps, these top 10 days here.
Yep. And that's true of all assets, but it's more true when there's more volatility in the asset. It's really, you see it at this extreme level of amplification here. It is something that, anybody who's trying to time the markets should cut that out and, paste it onto their computer screen, because it's true. And if you're not in, you're not going to participate in these huge upside days, and you're going to underperform the market, period. So great one. Love it.
That's what I've got for you. I'll share this one with you. I know you're a graph guy.
Yeah.
But happy Friday, man. Very, very thankful for your time today.
Great to talk with you as always, Josh. Have a great one.
You too.